Guys, in this video, I am going to show you my step-by-step take profit plan on how you can turn a $10,000 investment into Axelar into $190,000 in a fairly conservative way. So before we get started, I have to say none of this is financial advice. These are my own perspectives, my own research, my own philosophies, and should be treated as such. Do your own research, but use this channel as a starting point. So in this video, we're going to go through the Axelar white paper. We're going to go over what problem they're solving. We're going to go over some of their analytics and how they're stacking up to their competitors, their tokenomics. And then at the end, like I said, I'm going to show you my take profit strategy on how you can turn 10K into 190K, showing all of my take profit levels, as well as my yield farming strategy to show you how you can accumulate it passively so you'll have more to sell once the take profit levels are hit. So without further ado, let's jump straight into the content. All right, let's start with the Axelar white paper. So in the abstract, it says multiple blockchain ecosystems are emerging that provide unique and distinct features attractive to users and application developers. However, communication across the ecosystem is very sparse and fragmented, aka inconvenient. To enable applications to communicate across blockchain ecosystems frictionlessly, we propose Axelar. Axelar Stack provides a decentralized network, protocols, tools, and APIs that allow simple cross-chain communication. Axelar Protocol Suite consists of cross-border routing and transfer protocols. A decentralized open network of validators power the network. Anyone can join and participate. And it says the Byzantine consensus, cryptography, and incentive mechanisms are designed to achieve high safety and liveness requirements unique for cross-chain requests. Now guys, I'm not going to go through this whole white paper, but if you're investing into something, I recommend you definitely should. It's only 15 pages. That's like a chapter in a book. So it talks about how blockchain systems are gaining popularity for many different use cases, such as tokenization, DeFi, and other applications. They go on to mention different layer 1 blockchains, such as Ethereum, Monero, EOS, Cardano, Terra, Cosmos, and avax, and Polkadot, and the features that they allow. And then they say, however, the useful features of each new platform are currently offered to less than 1% of the ecosystem's users, namely the holders of the native token on that platform. And it says, can we allow platform developers to plug in their blockchains to other ecosystems easily? So they have two main ways that they go about doing this. Their cross-chain gateway protocol, and it says this is analogous to border gateway protocol on the internet. And this is used to connect multiple autonomous blockchain ecosystems and is responsible for routing across them. And it says blockchains do not need to speak any custom language. Their platform developers do not need to make any custom changes on their chains, and their chains can be plugged into the global network easily. And the other protocol kind of does the same thing. Cross-chain transfer protocol is analogous to application level protocol, file transfer, hypertext transfer protocols on the internet. And it's an application level protocol stack that sits on top of routing protocols. And it says application developers can connect their dApps on any chain to perform cross-chain requests. They go on to talk about the existing interoperability solutions, centralized systems, interoperability hubs such as Cosmos and bridges. So guys, as you know, or maybe you don't know, we are still in the dial-up stages of blockchains. Right? Like in the beginning, the internet was not easy to use. It took forever to load. The applications and the user interfaces were not intuitive. Like you have to be one of those tinfoil hat guys, just like you kind of have to be a degen to know how to use all these wallets and bridge over back and forth. Axelar is aiming to be the underlying plumbing in crypto, kind of like Chainlink in a way, to where you're using it, but you don't know you're using it. Like for example, you don't understand how electricity works. You just know when you hit a light switch, it comes on and off. You don't know how TCP/IP works. You just know that when you email someone from your Gmail, that they can get it at their Yahoo, right? Imagine how inconvenient things would be if you had to get whatever email provider that person had to use, or you had to do some kind of configuring to a server. A lot of people wouldn't send out emails, and that is why a lot of people aren't using blockchains, because they aren't interoperable. These blockchains can't talk to each other. Just like back in the day, certain servers couldn't talk to each other, which meant emails, certain websites couldn't talk to each other. Like things need to be interoperable so that everyday people that don't have to understand the technology can just go on and use it and not have to know what's going on in the background. That's exactly what Axelar is aiming to solve. It is a hair on fire problem. I believe that just like we saw tech eat the world, we're going to see blockchain technology eat the world, as it's just an evolution of the internet. So I think they're poised to have a good chance at solving this problem, and they're already kind of doing a good job, as we'll continue to go throughout this video. Like, I just want to drill this point home. If crypto and blockchain is going to be adopted by everyday people, they need to be able to use it intuitively without knowing what's going on the back end. We need something like this, 100%. So if we look on DeFi Llama, you can see they have $175 million in total value locked, and it's been growing pretty linearly. I feel like eventually it's going to start growing exponentially as we continue to get more developer commits and just people building on different blockchains in general. The more that people build on different chains, it's like this is network effects times 100. The more people build on each chains, the more they're going to want to connect them to all the other chains, the more something like Axelar is going to be needed. Like, we did a video on Ondo Finance, I think that was the one, and Ondo Finance is using Axelar for their bridge. And I'm noticing that the more research I'm doing on other protocols, Axelar is the cross-border solution that people select. So we go on their website, you can see that, some of their partners, they talk about how they're trying to solve the interoperability problem. Like, Axelar is the underlying network, just like we have fiber optic cables on the internet and, servers that are hosted by companies like Equinix or Apple and Google and Microsoft. It's the same kind of thing here. And the cool thing is that Axelar is a blockchain, so it's a decentralized way to have interoperability, which means it's not a single point of failure. So essentially, if you're building something on chain, you can build it on the Axelar network, and then you'll have it automatically be able to connect to other blockchains. It's kind of like building on TCP/IP. If you build on TCP/IP, you're able to pretty much interact with all kinds of internet protocols. Because if not, different protocols, just like blockchains, they have, excluding EVM, they have different programming languages. So it's almost like you have to build it out each time. If you want to build something on ETH, use Solidity. If you want to build something on Bitcoin, I think it's called Script, the programming language. So each time you want to deploy your dApp on a different blockchain without an interoperability solution, you would have to code it in that programming language. And not just code it, you have to make sure the coding's safe, so you have to get a bunch of audits, and it just takes a long time. This allows you to build it once, and then you're able to spread yourself thick, right? Instead of spreading yourself thin because you're having to do everything else that I just said. They're on 50 plus blockchains, over $7 billion in transactions, and 75 validators right now. And if you look at their investors, they're backed by the best: Binance, Dragonfly Capital, Polychain Capital, Galaxy, Coinbase Ventures. Like, it doesn't get any better than that. The only name I don't see on here that I'm surprised about is A16Z. All right, now let's go over their tokenomics, right? So you come here, you click tokenomics, and it shows the allocation. So 17% went to the team. That's not too bad. At least it's not over 20. 30% went to backers, aka investors. 36% went to community programs. And then 5% went to community sales, and 12.5% is for company operations. And then it also shows the supply schedule. And we're going to dive deeper into this. Just because a project is good doesn't mean it's a good investment, because it can have shitty tokenomics. It's not like stocks. So you want to make sure that investors aren't just going to dump on you, because they're like your competition. Like, you're competing with anyone who has token locks, because they can dump, and that drives the price down because it's supply and demand. A larger supply, even if demand stays the same, the price has to drop. So you can see that in September 2024, the unlocks are going to start getting a little crazier. They've already been crazy, but they're going to start getting a little more steep, and that we won't be done until December, pretty much the beginning of 2027, end of 2026. Let's go a little deeper. So right now, the market cap is 1.1 billion, but the fully diluted valuation is 2.1 billion. So that means around half of the tokens have been unlocked. So let's go a little bit deeper. So if we go to cryptorank.io, we were pretty spot on the ratio, around 50%. And this shows you this shows you all the unlocks. So you have linear unlocks for the community, the core team, seed round, series A. So investors are going to be able to start redeeming, as well as the team. That doesn't mean they will sell. And like, you have to think, we're going into a bull market. So just because things are being unlocked doesn't mean people are going to sell them. Now, that doesn't mean they won't either, because a lot of times people invest into this project at a much lower valuation. So these people are up big on their money. So it's not unlikely that they'll take some profits, but they could be greedy and want to maximize. So I always like to assume the worst, and that's why we're going to cover the take profit strategy. All right, guys, so here we are. This is my take profit plan on how I plan on turning $10,000 into $150,000. Right, so right now the current price at the time of this video is $1.92. The current market cap is 1.1 billion. Now, when I go about estimating where I think a project will go, I like to have my conservative estimate and my aggressive estimate, and I have my take profit strategy set up to where even if the conservative isn't met, or if it exceeds the aggressive, I'm still able to make some good money. So, start off with 10K. My first take profit level is going to be once it does a 5x. That'll bring the price from $1.92 to $9.60. It'll bring the market cap to 5.8 billion, and my 10K will be worth 50K. At this point, I'm taking my principal off plus 50%, so now I'm in a risk-free trade. So that's 15K. So now I still have 35K left. My second take profit is going to be once it does a 3x, the price will come up to $28.80. The market cap will be 17.4 billion, and my 35K is now worth 105K. So now I'm taking off 45K in profits, and I still have $60,000 left here. My third take profit is going to be once it does a 2x, it's going to bring the price to $57.60, and it's going to bring the market cap to 34.9 billion. My 60K is going to be worth 120K. At this point, I'm taking out 90K in profits. So now we are just under my aggressive take profit level. And as you notice, the more the market goes up, the more we're getting closer to the top. I'm not going to fool myself into thinking I can time the top. So the more we go up, I know we're getting closer, so I'm taking off more and more in case it drops. And remember, I'm already in a risk-free trade, so this is just a moon bag at this point. So now you have 150K in profits, and you have 30K left. You just turned 10K into 190K. But you're probably wondering, like, what do I do with the remaining 30K? Well, what I'm going to do is, since we're pretty much, around my aggressive take profit level, it could go more. But, I have other positions as well, so it's all good. So at that point, I'm taking off 50% profits every time there's a 25% increase. Just getting more and more aggressive so that once it drops, I'll have so little in the market that, I won't even care. Now, for those of you rascals who stuck around to the end, let's cover my yield farming strategy so you can see how to accumulate Axelar passively so you'll have more to sell at the height of the bull market. All right, so we want to go and find where most of the trading is happening on the decentralized exchange. So we scroll down and you can see that 14% of the trading is happening on Uniswap v3, Axelar USDC. Now I wish it was Axelar ETH because volatile pairs do better in bull markets, but sometimes you just got to play the hand you were dealt. So if I go onto my chart, this seems like it would have been a good range to provide liquidity. Now this is really volatile because it's paired with a stable coin. Like I wish ETH was a better pool, but it's not. So you kind of have to have a wider range. So let's see what I could have made if I was in this pool with this range from 80 cents up to $2.24 for the past 100 days, which is around this area. Go over to Builder Metrics. I plug them in with a $1,000 deposit. You could have been getting a 16.52% APR. Now guys, I'm glad this was low because normally it's really, really high. So I want to give you guys like my thoughts on this. Sometimes it's not going to be good. So here's your options. You can make your range a little tighter, but you saw how volatile it was because it's paired with a stable coin. So you'll be out of range. So this is actually a pool that I wouldn't even provide liquidity in unless I want to use it as a take profit strategy and set my range really, really high on the upside. So I'm just taking profits into USDC. So I would recommend that if you want to accumulate Axelar passively, get into another pool with a favorable volume to TVL ratio because this one isn't the best, and then take your rewards and use it to buy more Axelar, and then you already have your HODL Axelar bag on the side, so that way you can still accumulate it. That's what I would do, and that's actually what I'm doing. So guys, lastly, if you want to get access to our buy and sell calls and learn how to generate passive income on your crypto assets just like market makers have been doing since the 19th century. By the way, I called out Axelar in my group weeks ago, and our members got to experience a pump if they did their own research and bought in. But if this seems interesting to you and you want to do this professionally and just become a more well-rounded investor with an elite group of people with the same goals, click the link in the description, book a free strategy session. You'll either talk to me or one of our coaches. We'll see if the program is a good fit for you. At the very least, we'll make sure you hop off the call with a better understanding of the markets or yield farming if you have questions, and we're happy to point you in the right direction. But with that, if you got value, I ask that you drop a like, drop a comment, subscribe, let me know what project you want me to cover next. I thank you so much for tuning in. I love every single one of you watching, and I will see you in the next video. Take care and trade safe.